Hello, everybody. Welcome to another lovely episode with JayFx. Okay, so good everyone. It's 10 p.m. my time. I'm chatting you all from Nigeria. On today's video, I'm going to be breaking down types of entry patterns and types of entries we have in smart money concept. All right, so I know I have been doing a lot of series on smart money concept. For those of you who are new, smart money, it's basically a concept or a theory strategically placed or this basically talking about manipulations, all right, possibilities of manipulations of the algorithm. That's a logical way to explain smart money concepts. Okay, so for those of you who are new, my name is Jay. All right, and this is JayFx House. If you're new to the academy, we are an online platform where we educate people on trading and basically more on technical analysis and how to trade them the simplest way possible. Okay, so if you're new, you can hit the subscribe button and you can check us up on Telegram for daily analysis, or you can check us up on Instagram for daily content on multiple strategies and how to use them. So on today's video, I'm teaching you guys on entries and types of entries we have in smart money concept. Okay, so first of all, we're going to be starting with the Quasimodo pattern. All right, so I believe most of you are familiar with this particular pattern, which talks about a possibility of something like this. Okay, so it's a shoulder. Basically, you find so many breakdowns of what the Quasimodo pattern is about, but this is a logical concept that was created with the understanding of structure. Okay, coming to the Quasimodo pattern, it can be used as an entry pattern as well, but it's more preferable we go with the stop hunt and break of structure. Okay, so the Quasimodo pattern, it was the original one, which a lot of people interpreted as the head and shoulder pattern. Okay, with this being the left shoulder. Then we have a head, then the right shoulder. All right, so these have been used in multiple occasions as a reversal pattern, which multiple times have been proven to work, all right, when used properly, like I showed you earlier with the Fibonacci tool. But not everybody knows how to use that, and it's even more deep than that. There's a video on Fibonacci if you want to learn how to use that. And if you're familiar with this pattern, you can just, do some combining with the both of them and then know how to use it yourself. But it's more complex than you think. But it's one of the most popular patterns and widely misunderstood. Okay, some people use the cartoon, the Quasimodo cartoon, where he has a big shoulder, but that's not what it's about. It logically has coordinates using the Fibonacci that you expect the left shoulder from the head and the right shoulder. It's not a joke. And so for me, it's too complex. It's too complex for you to use when you're just looking for one point to enter and one point to exist from, because that's what trading is about. So yeah. Now, secondly, we have the break of structure and stop hunt. Okay, so the break of structure and stop hunt basically is a pattern that gives the ideology of price breaking structure. Okay, and then still, instead of respecting the range as it should, we then see more of a stop hunt before price goes to respect the range. Okay, so this is called a break of structure and a stop hunt. Now, this is also very, very widely misunderstood because many people take this pattern for a stop hunt and a break of structure. If you say it's a break of structure, then a stop hunt, it makes more sense because if price breaks a structure, obviously we're expecting a higher high, right? But then if there's a stop hunt, what happens? There's a break of structure, right? Because the stop hunt clearly is just a break of structure, but price did not close below that low. So that's how you know the difference between a break of structure and a stop hunt. But it's still a break of structure on the lower time frame because it still broke the low. Okay, but the ideology of a stop hunt and a break of structure is that you see this as a manipulation, and then you still look for buying opportunities instead of shifting your buyers to sales. Okay, because this would be like a double break of structure, and you would just be looking for more sales. But no, the ideology of a break of structure and a stop hunt is that price break structure to the direction it's planning to, invalidating the previous trend, but still gives you a stop hunt of that strong low that broke the structure, manipulating traders into the wrong direction. This is a concept that was created originally from the accumulation, manipulation, and distribution theory you find on Wyckoff. Right? You see how it makes more sense. This particular concept, you can add how we got the PO3 ICT pattern from. So for those of you who thought the concept is called a stop hunt, then a break of structure, no, it's a break of structure, then a stop hunt. Okay. Even me, sometimes I mix them together, but the correct one is a break of structure, then a stop hunt, because originally price has to break structure for you to look for a new buy, right? That is price creating a higher high, and then you expect a lower high or a higher low for a new higher high, right? But no, when there's a break of structure, you then have a stop hunt where price goes below this low. Okay, but quickly closes above it. Right, when price quickly closes above this, and then this is just a week, this is still a valid stop hunt and break of structure as long as price breaks this high. I don't know how much clear I can be. That way, you then look for entries from these points for price to go higher. So this is one of the smart money entry patterns which we use for entries as well. Because now, if you get to understand the meaning of smart money, which I explained earlier, being the manipulation concept of trading, which we understand that instead of the structure being all higher highs and lower lows as we understand, we then add the concept of smart money, which we then understand that we then get to see manipulations of swing points. Okay, so we have internal and external structures. That's all smart money is about. It's trying to let you know that structures is not all higher highs and lower lows. We have internal structures and external structures, and some of them are liquidity, while some of them are strong points. Okay, so when you identify those points, you identify which is expected to be manipulated, okay, for a stop hunt, and which is expected to hold, while the other is being manipulated. Okay, so I know my drawing is very bad, but I just hope you get what I'm trying to explain to you. For those of you who are getting confused, you can ask questions in the comment sections, and I'll attend to them as soon as possible. So this is all smart money concepts are basically about. If you understand this little pattern, you get to understand majority of them, because it's not that difficult to put together what the concept is trying to explain to you once you understand how to identify those swing points. Okay, and there are videos which are available on educating you how to identify swing points. This is just a video to tell you which is an entry pattern you can use to find an entry or observe price for an entry. Okay, so you have multiple patterns and multiple concepts you have to apply to this as well, which is swing points, market structure, internal and external structures, and most of all these things are already available on the YouTube channel. So you can find that probably after this video, go through them and then try finding this on your chart. Okay. Now, let's move on to the next candle pattern, which is the FU candle. Okay, so the FU candle is a particular candlestick that talks about manipulation as well. All right, now there's a more understandable drawing, on the screen, but I'm just trying to do this so you understand what it's about too. So the FU candle is a candlestick that tells you when there is a manipulation, through the candle formation. Now that is also possible when you read the pattern of the FE candle correctly, because the candle is trying to let you know that liquidity has been grabbed. All right, so the FE candle comes in when liquidity has been grabbed and price is going up. Now, as you can see, this looks more like the other break, stop point and break of structure pattern, right? But this is not a pattern. This is a single candle, right? It's a single candle. It's more like a candlestick formation, not a pattern. So when you have multiple swing lows and points, you are expecting price to stop hunt. Okay. Now this candle wicks these lows, then close above them. Okay. And then the next two candles that comes out after this one, it has to engulf it. That is one of the major rules of an FE candle, because you have to see an impulsive move from after the liquidity has been grabbed to confirm that, yes, this is really an FE candle. Okay, so the candle grabs liquidity, then engulfs two candles above, giving a proper confirmation that there's a bullish momentum or a bearish momentum, whichever the market is, and you're quite sure that that is liquidity which is being grabbed. So you can take an entry from the FE candle, and this is one of smart money's most popular patterns. Some people call it the institutional candle. Some call it the FE candle. Okay, so you observe the candle after the break of structure, and then you expect price to give a retest of at least the 50% of this candle. Okay, so after the next two candle engulfs it, price comes back for a retest of these candlesticks before going back up. Same thing, you have a join over here showing a more explainable way the pattern work. But the ideology of it is basically this. It's just this. Okay. Price retraces back to give a retest after there's a proper engulfing showing impulsive move. Now let's move over to the charts where I show you guys some of this stuff on real chart. So this is JBP USD. Let me go to a more fresh pair USD. All right, so let's look for an FE candle. Okay, obviously this is the 4-hour time frame, but let's mark out a point of interest. So we got this wick by this candle. So let's go to the lower time frame to see what happened at this point. Okay. So I think this was NFP or something, but this is definitely an entry candle. So this is definitely an FE candle. As you can see, price wicked the lows. They closed what? Closed above the candles, the previous candles. This is the confirmation. And then you see the next candle goes up. This is the 15-minute time frame, and the 5-minute time frame is to be more clear. I just hope we can see more data. The FE candle is a very useful tool, but it's also risky as well. You have to be very cautious and careful not to make any mistake. Okay. But most of the time it happens with a very, very impulsive move. Most when you have high impact moves like the FPs and stuff like that, it's more easier to trade when it's coming from a PY. Okay. And you can use multiple entry confirmations for this. It doesn't have to be just the FE candle you see before you trade. For me, most of the times I use this tool, which gives me the 50% level of that candle. All right, so with the candle I'm drawing is the candle that caused the manipulation, which is this one. All right, this was the one that with the entire liquidity of this point. Let me see if I can grab this. Okay. All right, so if we were to have a structure, this would be a high, All right, so this would be our low. And then this was the higher time frame liquidity point, right? So price did what mitigates this guy, went up. If this was supposed to be a strong low, then it would have broken this high, right? But then that did not happen. A mitigation happened, right? So this would have been the point of interest that moved this structure down. See how simple that is. And then what happened? We had an FE candle which cleared out liquidity from the higher time frame swing point. All right, so where did the candle close? Above the liquidity point, which was this. So where was the 50% of this candle? Is this. All right, this was the full candle itself. It closed above the liquidity point. All right, so this was the higher time frame liquidity area. The price closed above that. So the 50% of that candle is being observed, and that would be basically the entry point of the FE candle, would be this. All right, so if you have observed some of my news entries, you don't find me entering at the peak of the news formation. You can see some of my entries displayed on the screen right now. You don't find me entering at the peak, but you find me entering at least 30 pips already gone in that. But it's still a snipe entry on the lower time frame. Right, these are some of the lower time frame entry screenshots as well. Okay, so it's basically this concept I use on smart money concepts, which I used to get my entries. All right, so I don't expect you to get this on the first try or the second try. It's something you practice on the demo till you're used to it before you try to start using it. Okay, so the FU candle is a very useful tool. Once you can identify it, and then you're sure of your structure. As you can see over here, we had this high, low, low, high. So where was the 50% of this range? So price was already within discount. So where were these the internal highs or lows? Sorry, we had this. So these guys were the liquidity. Okay. So what happened? This guy came and stopped everyone out, which was the FE candle. So where is the 50% of this FE candle? That would be this. Right, so if I was to enter at this trade being bullish, this would be my entry point. My SL would be below this low. All right, so my first target would be this high, obviously. So that was the structure. And then my second target would be to break this high. But if we don't break that, obviously, then my observation points for a sell would be this point. Okay, so I'll be observant of that, maybe to take a sell from there. But trading of the FU candle would be this. All right, so this is the beautiful trade of the FU candle. If you would want to understand more about the institutional candle, you could join us on Telegram, where I educate you guys more basically on this daily. So you could tap the link in the description, join the community on Telegram, and then you get to do this more directly with me, okay, from the academy. All right, so we have the Quasimodo pattern. We have the stop point and break of structure. All right, so let me show you a little bit of that. If you know more on, if you're educated more on accumulation, manipulation, and distribution, then it's basically what the stop point and break of structure pattern is. So there's not much difference. It's just identifying an accumulation, which is this. Right, the trend is bearish. Okay, obviously. Right, so the trend is bearish. So what happens? There was a break of structure. Right, there was a break of structure. Originally, what would we do? We would pay attention to this point for a buy, right? Because price has broken structure, we would expect this. But what happens? There was a stop point. And price broke structure to the other side. Okay. So this is what we call is a break of structure and a stop point. Basically, this whole scenario you see happening here. So price keeps manipulating multiple highs and lows. So what happens then? We pay attention to selling areas of the trend from now because we know this was a stop point and now we have a break of structure. The price is still bearish. So we pay attention to either the breaker points or the order block from this point. Right. So in this scenario, the breaker point got mitigated and price went out to clear this low. So structure is basically just breaking internal and external structures while mitigating key areas. If you can identify those key areas, you'll be good to identify most of how structure works, okay? And you'll be able to understand how price action works, okay? And basically, you need to know what these kind of nations are, because these kind of nations have their names as significance. We have ebooks as well, which are simplified and available in the Telegram channel that could help you out with this. Most of them are free, so you can just go through them and understand how this whole system works. Okay, so for now, we'll be stopping here. I've educated you guys a little bit on if you can do a little bit on breakup structure and stop hunt and the Quasimodo pattern. That's enough for you to go through and get educated a little bit on your entries. All right, so I'm not here to teach you something new. I'm just here to simplify those complex theories you find online to help you get a better understanding of what you're doing while you trade. So thank you for joining us today. See you on the next episode. Bye.